This is WLUW Chicago 88.7 FM. And we have with us at WLUW Ashor Daniel. He is a branch manager at Associated Bank. Welcome, Ashor.
Welcome, and thank you so much for having me and us as the bank with Associated Bank. Thank you so much for this opportunity.
Okay, thank you. First of all, it seems as if many people do not have financial literacy. How could people have better financial literacy if they have not learned anything at all? What is the first step?
I think it's pretty much you could do a lot of research online, but I would most likely say visit your local community bank, as there's a lot of information in the banking field itself. But a lot of it is it's at the touch of the finger. Googling it, information is out there. As for Associated Bank, we strive for promoting our the literature itself. As far as banking goes, educating the consumer out there on where we stand as far as the country, the rates, and everything that goes forward with that. The banking field is continuously growing. Technology with that's growing. This is not your old bank where you'd come in and technology itself has advanced so much more now, where everything's at the touch of the finger, online banking. And it's not the old paperwork anymore. A lot of it's digital.
Mm. Yeah, we in the old days, you had to go in and fill out a deposit form or a withdrawal slip and to control your money. But now it seems to be a lot easier. But at work, I have many elderly customers and even some younger customers too that do not have a phone, a smartphone, and
Mhm.
they're not computer savvy. So what should they do?
So, you know what? By me saying what the banking field has advanced so much in the recent decade itself, even within year in, year out, we're consistently, uh, banks are coming up with new technology, new computers. Now with the technology of AI, that's a future global, how it's going to be when it comes to banking. But you know what? That feel of the old community bank of coming in with the deposit slips, withdrawal slips, that's always going to be around because people prefer a lot of that. We still have our brick and mortar offices that people want to come and sit down because not everything is going to be done through the digital apps. When you're looking for a loan, we need to see people in person. Yes, there's opportunities where you can Zoom, we can see photo IDs off of Zoom, but that one-on-one is a lot better when it comes to overall relationship with the customer, with the banker, and the bank itself. That's always going to be there because that's where kind of the chemistry comes in and the trust builds together. And that's how you open up more opportunities that sometimes you can't do over the phone. And a bank won't recognize what they can offer you when you talk in person and I take information down, which kind of leads to what we offer as far as most other banks that have gone so digital is that customer feel, the human touch.
Yeah, we understand that the mobile app is very useful so that the customer actually does not have to take the time to commute or walk or drive to the branch bank, that it is very convenient, like to maybe deposit a check or whatnot.
Mhm.
But uh, what uh, what should they be most careful about when, let's say, using a mobile app? Is there any caution? Like some customers, they're very worried about their information, maybe on Wi-Fi getting stolen. Are there places where they should not do any banking while they're on a mobile app?
The mobile apps are pretty much secure when it comes to your financial uh, information. I'm not saying that it doesn't happen. There's fraud. As much as we advance our technology to prevent fraud, the people out there that come up with technology to combat that, excuse me, but the banks offer customers the security. They're backed up with their accounts up to a certain amount, which is obviously FDIC secured.
Mhm.
But fraud happens all the time. I see it all the time in accounts, as much as not just Associated Bank worldwide, but they have the tools and resources to go ahead and protect the customer for that. So that's something I wouldn't put too much emphasis on because you're protected as a consumer.
So it's okay to sign in. The credentials are, it's okay to sign in on a network that's other than your home network, home Wi-Fi network. You could, it's okay to use the app.
Absolutely. Absolutely, it's protected. And also to say that as long as you're downloading the app that is recommended, you're safe as if you were downloading it on a regular computer. So like again, when we bring up our online systems, our digital apps, every time we roll out a new program that's on there, it's always safe and secure because the next step is every time there's something fraud that comes over or a new wave of fraud comes up, we obviously update our resources too to make sure that your accounts are safe too.
So you mentioned that we have to get the recommended app. Are there any apps that are similar to your app, but there are fraud apps that people could get confused about and then download the wrong one?
Not necessarily, no, there isn't. It's just because when you're downloading the app, it's coming from the app store. If you have a Samsung, Google apps or iPhone store, those are all good apps. That's what you want to download. And also with our digital in our banking too is let's say you make a transaction, if it's through your debit card, and if it seems like out of the rhythm that you normally do, you'll get a text message saying, is this fraud or not? And the way you answer it, either that debit card and that account will be not per se blocked. The debit card will be blocked, so it's not further in use. And then you're protected at that point. But if you say, no, it is me, you just hit, yes, it's me, and you can continue on the purchase. And that's what's the beauty about the algorithms and how you're purchasing is they see your routine. And that's the beauty of the technology now. They see your routine of purchases, and it'll know this is not something you seem like you would do often. So they'd question it. They'll send you a digital message. Most cases, when you're out of, and I see this a lot when you're maybe visiting out of town, out of state, you'll get those messages because they see that you're in Illinois purchasing. All of a sudden, you're in California. Some of them might go through because they've seen history from before. But if it's something out of the normally, especially if you're purchasing online, if it's out of the country app that you're purchasing from, it's automatically going to ask you that question.
Mhm. Yeah, I had that experience before. But with my customers, I'm in retail, so sometimes their transaction gets blocked. I say, well, check your messages. Check if you got a
Mhm.
message from your bank about the fraud. Maybe you're I think what happened was that she did one purchase and then she did another purchase immediately after that to keep within some spending limit that's allowed. So she did get a message for the second purchase. Is this a duplicate purchase? Just to make sure. So
Right.
when she said, "Oh, this is another purchase," so then the amount went through.
It's wonderful now with the digital app because you can set your boundaries of how you want to receive messages. Where if you want, you could click on the icon and it'll tell you every purchase you make off a debit card, it'll send you a message. If you could set it to where you don't want to spend more than this much, it'll stop the debit card from purchasing. So anything coming in and out, you could set those parameters to notify you. So at least that's a bit more of a security cushion too. And you could stop your debit card through the app itself too. You could,
Right.
you could, yeah, you could stop it too. So going into that with Associated Bank, we are the leading in Midwest banking as far as franchise, offering full range of financial products and services from about 200 locations. The company itself was founded in 1970. We're a $1 billion company. Our footprint, our headquarters are in Wisconsin. So now we're in obviously Chicago market, Illinois, and then we veered off towards St. Louis and Minnesota. So we're branching out really well. We do our due diligence as far as you see a lot of these banks out there that are failing or they're opening too many locations. Banks are buying out. We watch the market. We value our money with what's coming in, and we do our due diligence, making sure that we're opening the right location where it's needed.
Hmm. How could you tell that it's a correct location for you?
That's set more on the upper management. What they do is they look at statistics, see what areas are needing banking, what the competition's like, what works, what doesn't work. That's up to their decision. But I know the further the footprint out in the Midwest area, it's better for overall the growth and for the community and the customers and the bank itself. So
Hmm.
Associated Bank has set forth about $2 billion commitment to lend or invest billions of dollars to support minority communities, low to moderate income communities, and small businesses across our footprint. So especially with Rogers Park, we are here. I'm trying to promote as much as we can. As you can see, we're part of the Rogers Park Chamber. So that's our commitment, is trying to help out the small businesses as much as we can.
Hmm.
Our work with our community advisor councils based in Illinois, Wisconsin, Minnesota, focuses on identifying, addressing systematic economic development and equity issues.
Hmm. So in other words, you go into those niches where perhaps there are not as many other banks catering to the needs of the diverse population, and then you step in there because you're in that niche. Associated Bank is in that niche.
Right.
Okay.
Yes, yes. So and then to me, the small businesses is what thrives the communities. Um, and that's what we're trying to promote as much as we can. And when it comes down to the banking part of it, if it's consumer, if it's business, and even the lending part, we try to do our best to make sure that these businesses grow and prosper. Because at the end of the day, the community only works if they're helping each other out.
Hmm. Right. Well, getting back to the other thing, I did want to mention, and then we'll step back into the small
Sure.
businesses. Uh, when I went out of the country like once for a school trip, I made sure that I called the bank to that I will be making purchases from that country. And when I had some conferences in other states, I always call ahead the bank to let them know that I will be at that in that state making purchases. Is that important? I was just worried that my purchases will be rejected, but would my purchases have gone through if I had not called?
So that's, you know what, again, it goes to algorithms and the AI technology now. Mo Excuse me, most banks that I've worked with before and associated to, it's very helpful to let the bank know you're traveling from the
Uh-huh.
dates and what countries you'll be visiting. If it's just not just one country or in towns, because when they put that in the system as a message, they'll see, okay, she let us know that Trudy let us know that she'll be visiting this country from this date to this date, so we know that you're there.
Hmm.
If you don't say that, that's something you can still be backed up on it. But if those are not your purchases, it's a little bit harder to work with a country that's the purchases were not made by you.
Hmm. Hmm.
So it's beneficial for the bank and the customer itself.
Hmm.
Because you don't want to be stuck in that country, and let's say we stop your transaction and then you're stuck somewhere. Now you can't use your debit card or credit card, what have you.
Right. And one of my customers also told me that uh, he had a sudden purchase from California, which was not his, and then the bank was able to stop it so that the purchase didn't go through. Somehow his someone tried to use his credit card to buy something.
So yeah, there's debit cards, which the banks, the ones we issue debit cards. There's credit cards, and those are something that's more on the credit card end, where they
Mm.
deal with the credit card company.
Oh.
Debit card, and so a lot of people do mix that credit card and debit card, even though the bank offers credit cards, but it's a third party company that we have a relationship with that
Mhm.
we offer for our customers. Debit cards are more bank issued.
Right.
Credit cards are another the credit card companies. Mhm.
But for both, if you're going to be somewhere else, let the credit card company know or let the bank know that you will be making purchases from another location, right?
Absolutely, absolutely.
Okay.
It's a peace of mind for both parties, correct?
Mhm. So for small businesses, of course, it's always good to have more funds enough funds at hand to for emergencies and just to keep the business running. What do you recommend to small businesses to make sure that they're able to meet all their emergency expenses and their regular expenses
So
through?
I would say is knowing how to budget with your staff, depending on the business, the product they're purchasing, how often they purchase it. Every business that I can say it is would be very beneficial to have a business line of credit. So a business line of credit almost acts like a credit card as an example. It's there for you when you need it. Even though it's not a credit card, it's a line of credit based off of we go off of how long the business has been there, the kind of what kind of business it is, some credit checks. So it just sits there, and if for something a product that the business needs to use, for example, a mechanic shop, they deal with their hydraulic lifts for their vehicles, whatever parts they use to fix their vehicles. One of those products fails, now they're scrambling around to figure out how I'm going to get this product, this tool to be fixed, and that's where they can go into their line of credit, depending on what they're approved for, and then write a check, have it fixed, rather than dipping into their own cash and money from all the money they worked hard for. That can just utilize a line of credit. So as an example, I say to these businesses, well, why do they need it? When you purchase a car, it comes with a spare tire. When one tire goes flat, what are you going to replace it with? A spare tire. I kind of say that analogy towards businesses. Look at it as a spare tire when you have that. If you don't use it, it's just there for a security purpose. Another way example I tell them is it's like a line of credit for a house. When you purchase a house, you don't know when you need a new roof, how much it's going to cost. A lot of people like to do a home equity line of credit. It just sits there for an emergency case. And
Mhm,
you only pay for what you use on both ends.
mhm. Yeah, so it's valuable because you can write a check right away off that equity that bank already pre-approved,
Mhm.
rather than having to worry about having the money in the bank before closing the contract with, say, the roofer.
Right, right. I mean, the roofer is going to want his money. Again, it all depends on the situation. We have situations where a air conditioning unit might go bad. So these are things a lot of people have to think about rather than using their own expense, rather their own cash flow that they save. They could use that and then pay it off on a monthly basis, however they want. So
Mhm.
that's the security that we offer here too.
Right. Because oftentimes if they hire a contractor, they have to pay some money down, and it's
Right away.
and
Mhm.
with the equity there, it's much easier to pay it and then budget it later. So
Absolutely.
you were talking about budgeting. Are there any tips for budgeting for let's say a business and maybe even for homeowners? Let's start with the businesses first.
I think it just comes down to how often, if they're utilizing I mean, I'm not an expert in this field, but budgeting, it's always going to come down if you have an accountant. A lot of people have their own accountant to budget what their purchases are for, if it's something in need. A lot of times I see, a business can fail because they're not keeping up with the competition, what the other competition that they're very close to, what they're selling on the dollar amount. And if they're above that or they're below that, they have to keep it that in check. So they need to know or if they're purchasing their products to sell, if it's products that are not selling, they have to kind of monitor that year in, year out. What's more needed this year that rather than last year? What's selling, what's not selling? And
Mhm,
that's a track a lot of businesses don't do, or they lack because they don't look into it with their accountants and say, okay, here's a product that's selling really well this year. It wasn't selling last year. Let's cut that. Rather than just continuously purchasing the same products, that's how you kind of start budgeting on that end. You're losing money on one end. You could save it by knowing what from one year to another what's working and what's not. And that
mhm,
and that to me again, it goes out with having an accountant for your business.
mhm. And then
And obviously also,
Oh,
Trudy, it's putting your funds in money that works in an account that works for you. Banks offer savings account. We offer a wonderful product now. We're offering 4.25% with Associated Bank. Obviously, the rates can change at any time, but 4.25%, it's a great rate for businesses. We offer it on the money market for the business. It's a liquid account. There's obviously how much you can maintain in there to get that rate. But that's on the terms and conditions. But 4.25% for a business money market, and we offer that for the consumer end too. So it's for 6 months. It's a great rate right now
mm.
for the competition out there too.
So is that the interest that the people get on their money, or is that an interest rate that they pay if they spend money out of the equity of the business line of credit or the home equity?
No, this is something completely different. This is more of a savings tool. It's a savings
Oh,
account.
money
It's
account,
another
money
source of
account.
how
Yeah.
a business can budget better by
Mhm.
having the right products, by putting their money into the right products. A
Okay.
CD, a liquid. So the money market is a liquid account where they can add and take out. It
Mhm.
gives you a rate. CD is you lock it in for whatever term it is. Once you put that money, you can't touch it. And if you
Right.
break it, obviously there's a penalty. But right now, most businesses like the opportunity of having something more liquid so they can actually add more to it in the future. So that's why I'm saying the business money market, it's a very good resource
Got it.
to
Got it.
utilize.
Hmm.
Mhm.
Yeah, it's like a bank account, but yeah. What is the difference between that money market account and let's say a checking account? Why? Yeah, why did they call it a money market? I really didn't understand it that well. I just thought that maybe it's a little better interest rate, but what makes it better? Why do they have it there?
So the checking account, they offer more where it's more utilized on a day-to-day basis. You're paying your bills with a checking account. You're having checks deposited into your checking account. The money market's more utilized for a savings tool. That's what's considered somewhat of a savings account. You could write a checks off of it, but it's mostly utilized for having funds being put in there to get a better rate. A money market savings account is going to have a better rate because it's utilized for that purpose of just saving. A checking account is more of your day-to-day activity account.
Okay. So in other words, the money market account is there for emergencies in case like the business needs it, but if at all possible if they leave that money there, it earns a much better interest rate.
That's correct. That's correct. That's why they separate the two, where you have your everyday account, which is your checking account, your deposits, your withdrawals. You could do your payroll off of it. That's used on a day-to-day basis. Some checking accounts offer interest rates depending on what you maintain in them, but they're never going to get to the point where they offer a better rate than a money market.
Got it. Got it.
Mhm.
Um, for the businesses, what I see. Okay. How do they uh how would they know how much equity that they need, that line of credit? What helps determine the line of credit?
There's a lot of parameters in there. When a business comes in, we look at how long they've been in business, what kind of business it is, W2s, how much they brought in last year. So they're the credit score. A lot of it looks similar to the consumer side, but it's more on the business end. Obviously, just like every other bank, there's some businesses we just don't lend to, and that changes year in and year out. Some businesses we never lend to, we can, and some business that we did, we won't. And that's just again, that's up decides the company decides on that situation. I can't speak on which companies itself, why we do that, but it just goes off of how long they've been in the company for, or how long the company's been there for, um, how much cash flow they maintain coming in through the year, so we know what the limit would be for that business.
And you said that some companies, some fields that you change and you don't lend to those fields anymore. But if you do have clients from that field from before, you keep them, right? You're able to keep
They're
them.
grandfathered in it, correct,
Okay.
correct.
And then and if they don't use their business line of credit, it doesn't affect them, right? They could if they don't need to touch it, they don't touch it. They won't be penalized for not using it.
No, they're not going to be penalized. The only thing that we do say is there is like an annual fee. The first year is waived. It's just, and the reason why we charge an annual fee because we have to reassess it every year. So
Mhm.
we go in there and making sure the year to year how much changes in not the business itself, the market itself. Because just like um, it's based off of prime when you talk about the business line of credit, so the prime changes, we have to adjust the rates on that. Um, so that's one part of having a line of credit. It's you only pay for what you use. The term now there's also term loans. So let's, for example, the business knows I need this much, I need to use it right away. Then we have a term loan. The rate's set, the amount set. Once you apply for it, you'll get approved for it. Your monthly payments will be off of that exact amount.
Mhm. It's just so it's automatic. You don't have to worry about it anymore. Just have enough to pay it.
Correct.
Mhm.
So the business line of credit, it's just think of it as a credit card. You only pay for what you use, but it fluctuates as far as the term goes. So if the prime changes, if let's say for example, prime is 7 today,
Uh,
it'll change in next year to 8. So it'll just adjust. And if prime goes down, it goes down too.
and let our listeners know what the prime is. Some people don't know how the prime is set.
So the prime you can always Google. I off of my head, I want to say it's right around 7%, 7.5%. It's based off of the government prime scale.
Uh, how much they charge for lending money to the banks? Is that what you mean?
Pretty much. And then the bank assesses another percent or two, depending on obviously just what they charge for all the documents. And depends also the rate will affect depending on the credit score too, just like on the consumer side
Credit score of the bank.
of the customer of the individual himself.
Of course. Okay.
Mhm.
Uh, and you said that there might be there is an annual fee for that business line of credit. What is it? Is
I want to say it's about 350 a year on the business side. I don't quote me on that exactly, but I know on the consumer side, again, we're talking about consumer too, for home improvements. It's $50 and it's again waived the first year, it's 50 after that. Um, but on the consumer side, the beauty of it is need that home improvement, we don't charge any fees up front. We pay for everything. If it's the closing costs, all that the bank pays for anything, the everything, and the consumer does not.
okay. And is there any, let's say they need a new roof, the customer needs a new roof and it costs about $5,000. So does the interest accrue right away or is there a little grace period in the beginning where if they pay whatever they pay, then they won't be charged interest and they're part of the
The,
payment?
the interest accrues as soon as you utilize the money.
Okay, got it.
Yep. Mhm.
Any other tips for banking that because there's a lot of people, it just seems like they don't know anything about how to save and they they yeah how to save and how to spend their money more wisely. There's like zero financial literacy. Is there anything that you could tell those people about how to take control of your money? Because it's your hard-earned money and you need that money. What should they do?
I would honestly say stop at the local bank that you have, or stop into any bank that's close to you. Have a seat with a banker and let them know what are the scenarios. Here's a situation I'm in. How do I get from this point to this point in savings? So you're right, Shruti. A lot of people, they go to day, utilize more, pay more than they have, and budgeting is key for the future itself.
Mhm.
I think a lot of people don't know that because they don't have the proper tools to save and how to save. So they take their money and they live paycheck to paycheck. I see a lot of it.
Exactly.
And it's how you set yourself up. Like I said, most of us, I like to call myself a financial advisor because I love helping people. When a customer comes into our bank, what our main priority is, we call it the cure conversations. It's having a customer with them accepting, having a sit down with them, asking the right questions. Where do you plan on? What's your plan from now? Let's say 5 years from now. What are your goals? And I think that's what breaks the mold. And once the customer starts talking, we start taking notes. So we want to make sure we're putting them in the right product. So what are your goals 5 years from now, 10 years from now? Where do you want to be when you retire? How much you want to? That's all those questions people need to be observant and understand. Because at the end of the day, when you retire, you want to make sure you have enough in your nest egg to live off of.
Mhm.
It's always you can even start when you're young. A lot of kids these days, they don't think about the future.
Yeah, most kids don't. Very,
Right,
very few
right.
kids actually
And
actually think.
if you're actually utilizing your money in the right way, there's more tools out there. There's other resources. Unfortunately, I'm not licensed for it, so there's other resources outside of what the bank can offer. We have investment opportunities too that are guaranteed also with probably a higher rate.
Mhm. Because some, like you said, people live from paycheck to paycheck, and they want to save, but do you have any advice for people that really don't have much to save? What could they do? They need to save for retirement, but they could barely meet the rent and meet the grocery bill. So any advice for them about how what tools they could use to actually start saving? I know that budget there make a budget, but there's not that much money to budget. Is there any advice that you could give them?
Cut down on what you really don't need. I
Put
would
down
say
what you,
cut down on what you don't need on a
uh,
daily basis. That's
mm,
pretty much it. There's ways out there. If you live very close to where you work, maybe walk there, take the bus, utilize the public transportation. Gas prices are high. It's all budgeting. Looking back at res and another thing is what's really nice, kind of going back to the digital app. It's advanced so much where it tells you how much you're spending on what, especially when you're using a debit card. And you could utilize like a chart. You can build your own chart and saying, here's how much I spent this month. Here's how much, and now you can cut back on what you, and it'll probably tell you in a way through AI. It'll tell you what's the best way to cut back if you utilize their tools. So
oh,
the tools are out there. It's just if the customer wants to do it. I can sit there and say, open a savings account, open this, cut back on this. It's going to come down to if the customer really wants to do it or not.
hmm. Yeah, I think recently I discovered the pie chart of what I spend on my credit card. It actually says
Hmm.
like how much for food, how much on this and that, and transportation, and it is yeah, it is out there. So
It's eye popping, especially if you don't have that tool or if you don't sit down and budget. It's eye popping how much you spend. Let's just say a week on stuff that you really don't need.
mhm,
But that's the thing. Like we see stuff on TV, like I want this, I want this, I want this. Do you really need it?
mhm,
That's. But and even opening just a basic savings account for the first month, when you see that money grow, it's almost exciting. Like, oh my God, look how much I made by just saving $100 a week, $50 a week.
mhm,
And it goes a long way.
mhm.
And
Yeah.
it'll even tell you if you put the parameters in certain the digital app, certain it'll tell you once you retire at what age, it'll tell you how much you'll make just off of what you're doing. That's not including your 401k, what you plug in the numbers. But I think that's something I see a lot from the past. My parents especially, because all they did was save. They never went anywhere. They never went on vacations. It was just save, pay the house, save. Now it's just you don't see that. It's just everyone's just it's free for all. Just spend, spend, spend. And
Right.
then when they have no money left now, they don't know which direction to go.
Mhm. Right. Yeah, because I've seen customers like that too. They spend on their credit card or their debit card, and eventually they don't have enough to make the entire purchase. Let's say it's a $20 purchase, and then there's only like $10 left on the card.
Right, right. Another way, and it kind of goes back to the next step is credit building. You want to build without credit in this country, it's very difficult to purchase anything worth uh, I'm not saying even like food, but it can come down to that. If you're trying to buy a vehicle, your credit score is everything about you. And if you have bad credit, we have the tools for that too. We have a secured card where you pay money. Let's say $300 is the minimum, and they secure that 300. They give you a credit card off of that 300. So once you spend money up to the 300 that you have, you'll pay it back and you start building your credit. Within a year, we kind of look back at it and say, okay, how much has it improved? And then we put you on a regular credit card and you get your money, the $300 back to you.
Mhm.
So it's a nice way to build credit if you have no credit or bad credit.
Well, isn't that the way that usually people start off with building their credit because everybody did not have a credit card in the beginning. So do most people start off with like a secured credit card just to help build it? What is the usual first credit card for a person?
A lot of times, there's variations to that. If you have bad credit, a lot of times the secured card is another way to get a second chance.
Uh,
When you have no credit, you might get approved for a regular credit card, but with a higher interest rate. Just
uh,
because we don't know. We don't know. The credit card companies don't know your spending habits. So they'll give you a higher credit card, a higher rate credit card than someone with a better credit would be.
so they do give you a credit card because you're working and then at least you have income, so they'll give it to you. But it's if you never had a credit card before, your interest rate would be higher than someone else who has a card
So
already.
yes, when you're applying for a credit card, they ask you the same information, your social security, because they can see, excuse me, they can see everything with your social.
Hmm.
So they'll ask for where you work, how long you've been there, how much you make after the taxes. That all takes an effect of how much credit they'll give you and what the rate will be.
Hmm. Uh-huh. And they take into account all your income. They'll ask you for the.
Correct,
Mhm.
correct,
And then
correct.
do they how often do banks update their record of the income that you're earning? Because some people might be earning more now, or some might be earning less than like a couple of years before. How often do banks ask about that?
That's just depending on the situation of what account you have. If you have a checking account, saving account, they don't look at that. But when you have like a line of credit or a business line of credit, they take an evaluation of where the market's at. Where do you have? They might say, okay, you know, eh, they might say, okay, they might call back the line of credit if you're not utilizing it. So there's different reasons for it,
Mhm.
right? But they really don't um, reassess per se year if you're just banking with us with a checking account, savings account, or a CD. They don't do that.
What about the credit card? I think I've on my my online when I go online on my desktop, sometimes they do ask me again, like, how much, what is your current income? So, yeah.
Right. That's more, they'd say that more. And I know we offer something where it's like next best product. They want to see what could benefit you. So again, it's generated by the system. But I think and I think I see what you're asking. Like for credit card companies, they do cycle through the year because what they look at is if you're paying your payments on time, how much you're paying, if you're paying it off. You don't want to also pay off your credit card right away because it could affect your credit. Don't know much on how that affects your credit because those are credit card companies. But if a credit card company sees you're making your payments on time, not delaying it a day, a week, that helps your credit score and you're building your future for that. So they might increase your line. Let's say you're approved for 1,000. They might come back and say you're now being pre-approved for 1,500 or 2,000 because you've been making your payments.
Hmm.
You become more trustworthy with a credit card company.
Hmm. Yeah, it makes a big difference. If I pay my credit card in full every month, so that once there's like a day where I don't because I just missed it, I too busy with something else and didn't check, then
Mhm.
I see that my credit score goes down by quite a bit just by not having paid right away.
Right, right. And that's unfortunately the effect of it. When you're paying it a lot, it doesn't go up as much. And if you miss a payment, it drops significantly.
Uh,
It's
but what-
just that's again,
yeah, but once
what
I
was
make the yeah, but once I make the payment, say, oh no, I missed it. Then once I make the payment, then next month the score oops goes way back up again.
it does. Yeah, and again, it depends on the situation of where you're at with your credit score too. If you really got great credit score, it's not going to affect you as much. It might affect you a little bit, but it'll go back up than someone who has no credit or bad credit, because then the company might see them. Okay, well, they're falling back into their bad hands.
What is a good credit score? Let's say what is good, what is uh, uh great, and what is like excellent? Do you have a
Excellent, 850. 850 is the highest.
uh that's the highest. And then what about
Um, that
the
is the highest.
and
The
800?
lowest is 300.
Uh-huh.
850 is the highest.
Uh-huh. And then what is considered very good? Like what is, let's say 800. What is that how is that what is 800 considered to be?
850 is considered excellent credit score.
Uh-huh. Hmm. Okay.
And then obviously, so it's a chart. 300 is the worst, it's bad. 850 is the excellent.
Hmm.
So a lot of people can fall in between 620. You can pretty much get approved. 620 to 650 is called the average. It's the
Uh,
middle.
hmm.
And obviously 850 credit score is excellent. So your interest rate on payments can be a lot less. You get approved for a lot more. 300, you won't get approved for a lot. You're really, it's pretty much 300. It's almost like you're starting your credit score all over again. That's the lowest.
Hmm. It's I always pay my bills on time, but I don't reach 850. So what's keeping me back from reaching 850? Because I don't have any loans where I keep making payments. Because does that affect it?
I'm not spec. That's determined more on the three credit bureaus. I think that
Uh,
sometimes when you have a lot, like if you have multiple credit cards, a car payment, the more you have open and you're paying them all on time, that's what helps you really build your credit score.
mm, okay. Yeah, because
Mhm.
I don't really understand. It's like I always pay my bills on time, and then I'm always stuck like around a certain point, like around
Right.
800 or lower. And
Well, I mean, like I said, 850 is hard to see. And most people I see that I've seen is 700 to 800 credit score.
uh,
That's really good. I'm not saying that's excellent also. I'm just saying like 850 is the top. Now, have I seen 850 in my life? No.
oh,
I see 700 to 800
mhm. Are there many over 800 then?
by a little margin.
Okay. So
Hmm.
people out there, the listeners, if you don't reach 800, you're still very you're still in good
If
shape.
if you're in 700s, don't frown upon it. That's very good. That's
Mhm.
very good.
Mhm. And usually, let's say they do need a line of credit, like home equity, or what are the parameters for a home equity? Do they have to check the income, and what does the credit score have to be in order to get that line of the home equity?
So that's all on each bank. Each bank's regulations are
Uh,
different.
uh,
Um, one bank might get approved for a line of credit, where another bank won't. And it just
uh,
depends on where they set the parameters for the bank itself.
uh,
Most cases, obviously, you have to have a house you own. Um, it'll help you more if you've lived there longer, your line of credit, because when you've lived there longer, that means you've paid your monthly payments. The more closer you are to paying off the house, the better line of credit you have because you have that much more equity in the house.
mhm, mhm,
Variations will go off a credit score. Um, again, if it's 300 in most cases, 400, 500, you might not get approved. You might have to think of alternate routes. 657, you might see that approval. And then obviously how much in most cases, it's mostly how much income you have in the house as far as equity, but variations of also if you're working, how much you make. They look all into all those.
Mhm. So if you did mention that if you don't qualify for home equity, you have to look for alternatives. So what kind of alternatives?
Credit card, you can put it on a credit. It depends on how expensive the project is. You can
Mm-hmm.
put on a credit card. Um, you may have to dip into your savings.
Mm-hmm.
Right.
That is
That's
hard
why it's essential to plan ahead
before you
because
need
you
it.
just don't know what the future might look like when I said people don't know how to budget. That's why having that planning ahead savings account because one thing might work, one thing might not. So you want to have that backup.
Uh, so in other words, right now you don't need that new roof, but it's good to have that home equity opens available for you so that when you do
Right.
need it, you don't have to ask for it and be rejected. You already
It's
have it.
exactly. It's you don't know when you're gonna get a flat tire. That's why it's good to have that spare.
Mhm. And any other suggestions for people that let's say the what problems do you see in the customers that they have the most of that that you like helping them with? What are their most customers have to deal with that are difficult for them that you are able to help them with?
I think it's mostly knowing a lot. The majority of the customers I get, it's um, planning rates. Like let's say they want to open a CD, the competition, whatever the bank is offering than our bank. That's why we're trying to offer the best we can, putting them in the right accounts to make sure that they're getting the best for their money. I always say is make your money work for you. So by putting them in the right product, helps. And that's why the savings accounts and the money market, the rate we're offering, just as our bank, we always want to make sure that we're right at or above our competition to keep our customers happy and then keep them in the bank.
Mhm. And
And educating them like with pretty much what I've told you, setting a plan for them, saying, okay, we're gonna open this account today, this account, and then let's look down the line. If you have any money coming in, uh, if it's your tax returns, 401k, anything you want to budget, put it into an account. So we try to establish something now with the rate where the money's going to be working for them.
mhm. Okay. So in so just uh expecting like future like an increase in income and then planning how to save that income better.
Correct. And we take like with our bankers, especially with Associated Bank, we take a lot of notes just so when we're also calling our customers, if it's a week, we just try to follow up see how their setup is in their accounts within a month to see how their money is working for them. And then, every time we have some promotions, we try to call our customers to let them know, hey, we have this coming up too. Let's visit and see where we are in the picture right there.
Mhm. And promotions is like maybe a lower rate for something and what would qualify as a promotion?
It's promotional rates. It's usually when I say promo it's a rate increase.
Uh,
Um, yeah,
or like if the interest rate were a little lower on a credit card, that's a promo too, right?
right. Well, interest rate that's going to depend on obviously the customer itself. We
Ah,
do offer promo. So right now we're offering a 0% for 21 month
mhm,
on balance transfers. So
ah,
if someone has a lot of debt on their credit cards, they want to transfer it over, you could transfer it over to that obviously pending qualification.
mhm.
They have 21 months with zero interest, so just to kind of pay off the debt.
Got it, got it.
Hmm?
Let's see. Let's see, there was a question I wanted to ask. Hang on. When the customers this have like a how often should should your customers check their online banking the everything like their accounts just to make sure that sometimes there are so many emails and then there might be a sudden fee that kicks in that they don't know about and then they might they might have a fee pop up. Is there any way that they is should they like watch their account so that there's so they could avoid some fees that that suddenly pop up.
Absolutely. And that just comes down to obviously the customer budgeting correctly. Like
Mhm.
back in the day, balancing a checkbook to know what you wrote. Sometimes merchants don't cash your check right away. So you want to, most people put alerts on their digital app, which we kind of touched base with, where it's anything that comes out of their account, it gets a little message on top saying this came out of your account, or anything that's going deposited into your account. For example, when my payroll comes in, I get an alert saying your payroll is in. I've
Oh,
set parameters to say anything above $10, alert me. So you
oh,
can set all those, it'll tell you. Obviously, you can go into your app and look at what's going on, but sometimes having that little alert pop up, even if you're not in the app, it'll give you a little box pops up saying, this just came out, this just went into your account. It's very beneficial because some people forget, like, oh my God, I forgot this came out of my account. I forgot that it took this long. And by having these alerts, it helps a lot.
got it.
Mhm.
And what if there's some people, there are a lot of parameters to an account, and some people don't understand their account fully, which I think oftentimes happens. What if they're hit with an unexpected fee? Could they come and talk with you about that? And then,
Absolutely. Absolutely. We try to, when we're opening a product, explain to them how these fees occur. There are also disclosures we give the customer on how fees occur.
mhm,
But we'll sit down with our customers and explain, depending on the situation, a lot of times, we waive it as a courtesy of the first time or second time, but we try to let the customer know, here are the situations to avoid the fee.
got it. Yeah,
Mhm.
the contract is very long. It's like about 10 pages of fine print. So you're able to sit down with the customer and explain the highlights of that agreement that they just signed.
Right. And in most cases, depending on the account, we highlight the sections that affect them mostly.
Uh-huh.
Not every fee will be affected for the customer. It depends on what kind of account they're in.
Hmm. Yes. And there's that overdraft, and if there's an overdraft, then it goes into another account to grab some money to so that there's no overdraft. Could you explain that
Like
to
a sweep account? Yeah, you can set up a sweep account where, let's say you have a savings account, you have money in there, and your checking account is going to fall below the minimum balance. You can set up automatic. You could do it yourself if you know, yeah, oh my God, I'm going to fall below. You could do it digitally by yourself. Just put money into your checking from savings, or it could set up like per day where most banks will have it where it'll sweep every day if they want every week. Just have $150, 100, just so they maintain that they don't fall below the minimum balance.
Mhm. Because once it's below a minimum balance, there might be a maintenance fee.
Correct. So with Associated Bank, we offer a $50 grace zone where we don't charge if you fall below $50.
Mhm.
Anything below that, it's 32. But
Mhm.
again, it just comes down to letting the customer know when we're opening the product, how to avoid that. And the
Mhm.
$50 is automatically, it's like a grace zone that we automatically give. Yep.
Okay.
But we also offer, so in the situation you open an account, we say you can opt in or opt out. Opting in, you can opt in if you fall below the minimum balance, even at the gray zone. We'll pay it for you, but we charge 32. And some people say, no, I don't even want that. So if they're making a purchase of their debit card, it'll get declined because they don't have the funds.
Hmm. Yes.
Mhm.
And when it's declined, there's no fee from the bank.
No,
Okay.
no. Not everything will be declined. Sometimes if you set up an ACH automatically where they just come into your account, another company, we can't stop that. That's up to the customer himself.
Uh-huh. Okay. That would be coming out of the checking account or savings account, the ACH.
Correct.
Got it.
The checking account, correct.
Checking. Okay. Okay. Well, Ashor Daniel of Associated Bank, thank you so much for all of your advice about saving and
Thank you.
insights into banking. Thank you
Trudy, it was
so
a
much.
pleasure. And to the community out there, if you're a Rogers Park area, anywhere you are, if you stop into the Associated Bank, please do so. We would love to sit down and discuss planning, growth, and budgeting. That's one of our main concerns that we see having, and we'd love the opportunity to put that ladder in front and working with you.
Yes.
So thank you so much, Trudy. I appreciate it.
Yes. So if our listeners want more information, where should they go and like online and even the physical address if you yeah, just provide it for our listeners.
So absolutely, with you can Google where associated banks are depending on what the market is. With us, I'm in Rogers Park, 1763 Howard Street, and that's in Rogers Park.
Okay. Okay.
So 1763 Howard Street, and that's the Jewel Osco.
Uh,
We have one on Monroe, we have in Glenview, so we have over 200 locations. But in Chicago, if you just Google Associated Bank, find the nearest location, and they can walk in and speak to a banker or manager, whomever they want.
okay. Well, thank you so much, Ashor Daniel.
Thank you, Trudy. Have a wonderful day. Thank you.
Thank you.
Bye-bye.